Hi, hope you are fine today. Let's start taking a closer look into the analytical figures of our portfolio. I will explain them one by one. I'm going to show you our demo portfolio to have more interesting results. You can see these results if you're logged out of the system. As you see, I'm not logged in. Here I can choose a date. It's usually set to today. In this case, I'm showing you 14th of February 2022. And also you see the full list of your securities. Doesn't matter if they are all realized or not. So you see all of the securities you have in your portfolio. And you can choose from them. They are your equities, your mutual funds, and your ETFs. And these are the panels which have the analytical figures inside. And I'm going to show them one by one to you. Let's start then. The overview panel, as the name suggests, shows you an overview of your portfolio on your analysis date. As you see here in blue, we see all you have invested. For the realized case is what you have invested and made them into cash. And for the unrealized section is what you have invested, but you still hold your assets. In green, you see your assets in case of the unrealized part, and you see the net asset value that you have. For the realized part, you see what you have received in your bank account by selling those assets. In orange, you see the expenses. For the realized part, that means the part that you have paid as fees or taxes. And for the unrealized part is what you will pay as fees and taxes by selling your those assets. And you see that the gross value of your assets for the case of unrealized section is your net plus the expenses. It's obviously more. And as you see, the blue bar goes to the negative side. That means what gets out of your bank account. So what you send out of your bank account makes your bank account negative. And you should, by looking at this diagram, you should see some positive value to become happy, because that means you have gained something. In this case, in both parts, for the realized section and the unrealized part, we have gained. For the realized section, we have gained around 10%. And for the unrealized part, we would gain around 20%. And in case that you may lose something, then the whole diagram will end up in the negative values. Sometimes you will see that the orange part is in positive side, but the green part is in negative side. That means maybe by connecting to your bank account, you will see a positive performance of your portfolio, but in total, considering all the taxes and fees that you have paid, you may have negative performance. So you may have lost something from your investments. And also in the captions you see some more information. For example, you see your total investments and your total assets, which means the sum of those values, unrealized and realized part. Okay, this was all about the overview panel. The investment history panel shows the history of all your investments from the beginning of your investment up to the analysis date. Here we have two diagrams. The first diagram is all in total values, and the second diagram is your profit loss and also the normalized part of your profit loss. I will come to that later. So let's see what we have here. We have in blue, we have our asset value. That means the part that we still have or still had in our portfolio as assets. And in green, we see the realized part, the part that we have received as cash by selling those assets, or the part that we have received as dividends. That means, again, as cash going into your bank account. And what here should be important for you is that the sum of these two quantities, asset value and realized part, should be greater than your investments, the orange line. The investment curve, as you see, is event-based is a stepwise going upwards. By event-based, I mean at each event, the diagram jumps a little bit. And these events are your buy events. When you buy something, then this diagram goes upwards. So obviously we'll see some steps. And the realized part is also event-based because at the time that you sell something, you receive some money and the diagram goes up, or at the time that you receive a dividend, again, the diagram goes up. And all together, but the other diagram, sorry, but the asset value diagram is price-based and event-based, so all together. So when you buy something, the diagram jumps in a large step, depending on how much you pay to buy your assets, how much asset you buy. And the other part is just how well these assets perform. And the prices are taken from the market, then it means that this diagram is like more volatile than the other two quantities. And as I said, all in all, the sum of your asset values and the realized part of your assets should be more than your investment. Then you can say you have gained something from your investments. This is not the case always. If I zoom into the beginning of our demo investment, we see in the beginning we have lost a little bit. Also, it's not a little bit, it's a large part of our investment, but by patience and by passing time, the asset values and the realized part catch up the investment, and then hopefully if I go back to the original view, and then they catch up the investment and surpass it. So this was about the whole history, the whole amount, the history of the whole amount of our asset. And the other diagram is just a normalized way of showing that diagram. In blue, we see only the profit or the loss. So if I hide the IRR, we see, as I said, in the beginning, we lost a little bit, but after time, we started to gain pretty well. And at the moment, at our time, at this stage, we have gained around 6,000 euros. And the last value should correspond, the last value on this diagram should correspond to the values that you see in the overview panel. And if I show the internal rate of return, at the right side, we see the values. And again, we see a big drop in the beginning of the investments. Around 60% we lost, and gradually we gained, and for the date of the analysis, we have gained around 20%. Sometimes it's helpful to see the history of a single asset. Let's say in this case, I just click to none to deselect all of them, and I just select, let's say, the Coca-Cola asset that I have. And then I click again on the investment history panel. In this case, I see my results only belonging to this single security. And you see here, 2 times we have paid. That means possibly we have bought a few Coca-Cola shares. In the beginning, we have paid 1,000 euros, and then we have paid 2,000. So in total, we have paid around 3,000 euros to buy our stocks in Coca-Cola. And you see in blue and in green how much you have for this security. In this case, we have around, if I hover over it, we have around 3,500, 3,600 euros. And if I just show, let's say, the green part, the realized part, and I just click it again, and here is the realized part. It's mostly, for the Coca-Cola case, is mostly, as you see, the values are not so big. It contains mostly the dividends that you have received if you haven't sold your asset. In this case, it's just the dividends. And you see here, we have gradually received a few dividends as time passes. So in total, we have received around here 68 euros of dividends. The other diagram also shows the corresponding results belonging to your selection, in this case only a single asset, which is the Coca-Cola company in the demo portfolio. The other panel is the profit or loss, and you see the profit or loss for the unrealized part and also for the realized part. If I go to the unrealized part, I see the list of all my assets which I haven't realized yet, and also I see the average value. So in our case, in the demo case, for the Tesla Incorporation asset that of our demo portfolio, you see we have gained in blue. We see our profit and loss in a currency value. In this case, in our portfolio currency, in euro value, around 1,700 euros. And in orange, we see the internal rate of return. At the right side, you see for the Tesla Incorporation, we have gained around 40%. And the other assets come also after it. So for the Microsoft Corporation, we have gained a little bit less, but also it is positive, and so on. And for example, for the ETF, for the S&P ETF, in our case, we have actually lost something. So in this case, around 400 euros. And around 8% of IRR we have lost. For the realized part, you see the same diagram, but only it contains whatever you have received in your bank account by selling your assets or by receiving dividends also. The diversity panel shows you obviously the diversity of your portfolio only for the unrealized part of your portfolio. And you see here in the first diagram, you see how much of your whole portfolio belongs to each asset. You see here, for example, 28% of our demo portfolio is taken by the Tesla Incorporation. And you can see here how well your portfolio is diversified. If you see, for example, 90% of your portfolio belongs to the Tesla Incorporation or to one of your assets, then whatever happens to that asset, your portfolio will be largely affected by that. And whatever else happens to other assets in your portfolio would not matter much. In this case, you see, for example, for the Boeing company, it just takes around 1% of our assets. So whatever happens to this asset will not affect our portfolio much. And this shows that maybe in this case, for the demo case, the diversification with Boeing is not nice because you don't see any big change here. And in the next figure, we see the diversification in the asset types. We see around 70% of the asset is taken by equities, 13% by mutual funds, and around 18% by ETFs. This also shows that, okay, largely what happens to your equities, you will be affected by that most of the times. The other diagram is about the sectors. If you remember, for each security that you add to your system, you should choose a sector and a region. And then here you see how well you are diversified in this dimension, in the sectors. You see here in our case, for example, around 30% of the demo portfolio is taken by the industrials, by the industrial sector. And this is also important to somehow nicely diversify your portfolio. In this case, we have nicely diversified it. And also, finally, the regions shows you how you are diversified in different regions. In our case, we have North America taken mostly everything, around 90% of our asset, and the other part is the other. And if I go to the securities, I can change the. You see here for each securities, now I'm logged out of the system. I cannot do that, but essentially you can change the region and the sector of each of your securities. And then you will find the results in the diversity of the sectors and the regions. The annualized return panel shows you how well each of your assets has performed annually and in a normalized way. So annualized rate of return is very similar to the internal rate of return, IRR, but it is annualized. That means how much per year you have gained for each of them. For this case, for the unrealized part, we see, for example, that Microsoft Incorporation has gained 25% per year. But in total, we have lost a little bit. So on average, for the whole portfolio, we have lost 3% per year. And for the S&P, you see, for our ETF, we have lost quite significantly, about 40% here. This is just an example, so it doesn't mean that S&P performs much worse than the Microsoft. It's just for this example is the case. And you may wonder that your whole IRR was positive because in the other diagrams you just see everything was positive, everything was good. But why are we seeing a negative annualized rate of return? And that is because we have annualized it. That means possibly because of the market movement, maybe we are in a bad time and everything is collapsing a lot, although your whole portfolio is performing positively, your portfolio is not performing well in terms of annualized gains. So this also you see, for example, in many countries you have the GDP growth. Sometimes the GDP growth is positive, sometimes it is negative. When it is negative, it doesn't mean that that country is really bad country. It just means that in that year the country did not perform well. In total, for let's say for a long time, annualized rate of return is corresponding to your internal rate of return, because if this value stays negative for a long time, that means your IRR also will be affected by that. That means every year you're losing something. But I hope in our case, you can also hope for your case, if you see this as a negative number, don't be that much upset. Just be vigilant how your portfolio performs, but don't be that much upset because this is a really volatile quantity. So here for the realized part, we see the same diagram, but belonging to the realized part of our portfolio. Why we separate them into two different categories is because that the unrealized part is more important to you because you should do something with them. If you see some movement here, you should make your portfolio better. For the realized part, it just shows you how well you performed in your past. And it also shows you, it also gives you some insights. Okay, why did you perform bad or why did you perform well? So it helps you to build a better portfolio for your future. The dividends panel is obviously for the realized part of our portfolio, and it only shows you how much you have received as dividends per each asset. You see here, for example, with Coca-Cola company, we have received the most dividends, and with Microsoft the second one, and SoftBank. And also you see the expenses, because anytime that you receive a dividend, you should pay taxes. And the taxes are around, in our case, it's around 26%, and as you see, around 26% of all of our dividends are taken up by the expenses. This was all about the analysis overview page. In the future, more panels will appear here and more analytical figures will be shown to you. But up to this state of the video, these are the status quo of the system. Hope you enjoyed it. Take care and bye.